Good Monday to all of you from Chicago. It's 8:01 a.m. Chicago time on the 27th of April 2015. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. A look at the news that may have driven the overnight session. The markets are back in focus on Greece and the Greek uncertainty, with more talk of Grexit and Plan B, um, not to be confused with the Plan B pill. Um, Talk also did the rounds overnight that the PBOC could consider a QE program, although PBOC economist has stated that China does not need strong stimulus. Japan was cut to A from A plus by Fitch. Outlook stable, with Fitch citing insufficient fiscal measures in the fiscal year budget replacement of the deferred rise in consumption tax. And then finally, Apple announces after the close today. Let's look at today's calendar at 8:45, 15 minutes after the open. We have the U.S. Services PMI. Prior is 59.2. U.S. Composite PMI also 59.2. We're looking for Dallas Fed, which is a low importance number at negative 12. And that's pretty much it for today. A quick moment here to look at what we have on the week, since it is Monday. Tomorrow, Japanese retail sales, UK GDP advanced reading, U.S. Consumer Confidence Index, and then after the market API, crude oil inventories. Pfizer's announcing tomorrow. Wednesday, the German CPI is coming out, U.S. GDP advanced reading, U.S. pending home sales, FOMC rate decision on Wednesday, so keep an eye out for that. And then we're looking for MasterCard and Time Warner. And on European indices, we're looking for Deutsche Bank and Volkswagen. Thursday, Japanese industrial production, German unemployment, ECB economic bulletin, Eurozone CPI estimates, U.S. personal income, PCE deflator, ISM Milwaukee, Chicago PMI, Bank of Japan policy statement, and ExxonMobil. Lots of stuff on Thursday. Friday, Japanese jobless rate and CPI, Chinese, UK, and U.S. manufacturing PMI, ISM manufacturing in University of Michigan during the U.S. session, Fed's Mester and Williams, and we have some May Day closures in Europe on Friday. Be the 1st of May, I believe. Friday. Let's see. Yep, Friday's May Day. So that's where we are as far as the calendar is concerned. Let's take a look and see where we are when it comes to the technical picture. So here's the overnight session. I just wanted a quick look here at what we did overnight, showing that we did take out the all-time high of 2114.75 put in on Friday, with a high currently of 2118 on the overnight session. There's no clear particular driver here that's pushing this 2118, although Delta seems to be on the strong on the buy side on this move up, relatively strong. This is Friday's action here. Friday operated as expected. We were looking for responsive selling back into the point of control, 2107 quarter, and the gap, 2107. It pushed through by 4 ticks. I was looking for a potential push to 2103.50. That's a key resistance area. You might want to mark that on your charts. It did find buyers at 2106. Put in a double bottom, triggering our IB low stat, which historically has indicated that we have about a 17% chance of holding this low on a double bottom at the IB low, 17% on 1400 days. That study is about a year and a half old, but it has not changed over time. It's a tough study to update. But that particular stat didn't play out, so that puts us at 83% that this low will be taken out by at least a tick. The market migrated up and had a very, very slow session on Friday and then walked itself to the high of Thursday and had a quick failed auction rotation 4 points down and has stuck around at the high. Overall, a balanced profile on Friday, and we finished right against the middle of it. Point of control moved at the close, but most of the day the point of control was up here in the 2112, 1150 area anyway. So that brings us to today. Today we have basically a gap up, as I showed um, on the overnight session. We're trading at 2117.50 against 2118 high. This is likely to be taken out. Given the overnight session, the way it's set up here, we had an impulsive move up right here, and it looks like we're going to likely push for a continuation move to take out this 2118. The 2118 looks very vulnerable, and if you recall, my targets above were in the 2120 and 2123 area. That's what I've been preaching for a few weeks now, and we're making our way up there. The fact that we have a gap up this morning into all-time highs kind of puts me back on my heels a little bit. I'm going to wait to see what kind of reaction we get. The natural reaction, because inventory is long overnight, the natural reaction is for the inventory to balance, and for the inventory to balance, it's going to likely to need some selling right at the open. And so we're looking for that selling to come in on the open, and the expectation is that it would push back into the 2114 and back into 2111.50 to test the point of control and the close. When the point of control and the close come together, they create, even though the point of control is always a magnet, the point of control and the close together create a stronger magnet. So the expectation is it's likely to take out the overnight high on the open. If we still hang out here, and if it does, if it takes it out, I'm looking for failure. I'm looking for it to rotate back down. It may be a strong open as people get pushed into buying, as momentum-based systems, trend-following systems trigger to take positions on the cash open, and it's likely to trigger a push up like we've seen last week throughout the week, these strong buying sprees that we've seen over time here right at the open. So I'll look for that, looking for the 2118 or whatever the overnight high happens to be at the time. I'm looking for that to be taken out, and then for it to start to rotate down. Targets being initial target 2114, but the main target being 2111.50 for a gap close and the point of control to be closed. New all-time highs, as I said. We have no volume up here. We have targets behind us. It could easily attain that target this morning. Again, 2120 and 2123. That's really it for the S&P. Let's take a review of the Euro Stoxx. Actually, let's look at what it's done over time, what the S&P has done over time. This is my gap chart, and here's my weekly. So if we look at what the S&P has done over time, this is a weekly all sessions chart. Let's send this to the back. If we look at this, and the reason I'm doing this is to bring back context. So these are weekly bars, okay? We can see the weekly volume up here and the weekly range. And You could see that we pushed up into this. Remember the big sell-off, some really fantastic trading back in October, and then we pushed into this balance zone that started October 31st, and it continued all the way into the middle of February. February 12th is the date. February 13th, we pushed up, and then we created an additional balance zone up high, and we've been stuck in that balance zone. You can see these bars just taking each other back, higher, lower, all the way back to the low, all the way back to the high, then back to the low, then the middle, then push the high, and then we just got out of that. The balance here is broken, but there's just this is what happens with rally markets. It just looks like it has no steam, yet somehow, some way, it continues to chug along and push itself up slowly over time. And so I have no illusions that it's too heavy or it's gone too far and I should be hitting hard on the short side. I'd love to hit hard on the short side because the reward is much more quickly. I love markets that are panicked. It's just easier to interpret or read the action, the price action, and to trade it. But that's not what we're in. And I'm not going to think that way until we're in that. And we'll know very, very clearly when we're in it. But overall, we're again pushing out of this balance zone, putting in this new high. So I'm going to include this last week into this composite profile. And overall, the composite's saying 2095.50 is the most valuable price in this area on an all sessions basis in this balance zone from the 13th till last week. The profile's most valuable price is at 95.50, and then there's a second most valuable price here at about 2100, which is a key strike price. With the FOMC ahead of us and so on, we might expect some interesting action this week. But overall, the market is just moving in a very, very methodical and deliberate way. The push up, by the way, is on the announcement that on the rumor that the PBOC, the People's Bank of China, resorting to QE to help China out of this growth mess. And so but then it was these comments were later refuted by officials, by government officials. Now, whenever we've heard talk or rumor of that's relating to QE, and remember the ECB refused to admit that there was QE on the cards, all the way up to the point where they announced that they actually are going to start doing QE. So a lot of those rumors end up coming true. I'm not saying it's true for the Chinese one, but it's interesting how that plays out. The Euro stocks, they came back right to the high volume node, right into the 3630 of this whole zone here, and traded in balance, in chop. This is just textbook auction here. Pull back to the most valuable price, test it from above, chop at it, and then start to break out. The expectation next is for it to pull back into the high end of the chop for the next leg up. This is a market that's consolidated and has pulled in some energy. So now we can go ahead and move this and include the most recent action into this current action to see what we have done. And you can see on the left here the green bars, the green volume profile. You can see that there's a fair amount of energy imbalance and that it's moving out and out of value, which is at 36.84. It's moving out of value, trading 37.07. It's likely to target 37.36, but the next key area up is the next high volume node, which is from 37.36 up and through 37.60, and then 3800 is the next composite LVN. So that's the next area it's likely to target. So balance to imbalance right now. The euro stocks are in balance, and the cycle repeats itself. Crude oil. Let's switch to a 60-minute here. Crude oil is a much noisier chart, but it has been a favorite of mine here for the last little bit. It's been a really interesting trade. Let's switch to days. And then have a look at crude oil. In overall, crude oil has pushed back into that area above. I'm looking at June crude, so CLM5 has pushed into that area that I outlined in the old contract at 58.30. It pushed to 58.82. About a week ago or 2 weeks ago, and is balancing out. Crude oil is playing the way that is expected. It's definitely playing out the auction process, and is getting ready to push into the next balance zone up here in the 60s. Crude oil is not a with this week high now with 58.13 and 58.82. Crude oil doesn't. It looks like it has found its buyers from 45.43 in the current contract. It was slightly lower in the old contract. And the balance price in this area has now moved up to 53, 52.80, and has pushed into this LVN zone. Once it takes over the LVN zone, it is likely to move up into the next high volume node, which is around 60.36, which is my target. Okay, on the buy side. So crude is an intermediate term short, and I started talking about intermediate term long, and I started talking about crude being an intermediate term long about a week and a half ago, and it continues to push in that direction. Not that I'm telling you that to tell you that I'm right. Look at me. I'm telling you that so that you understand the background of why I thought it and the outcome of it, so that you have a reference so you can grow from that. Anyway, that's pretty much it. That's what I have for you. I've gone over my time, 17 minutes. I'll let you go. I did have a topic to speak about this morning, but with the weekly schedule and all this stuff, the weekend stuff, I won't get to it now. But tomorrow I'll cover it. I want to talk about the. I read a James Clear article from last week that's really interesting and very applicable to trading, regarding logarithmic improvements versus exponential improvements, and what we should expect with our learning and our return on the time that we spend on trading. We'll discuss that in the next couple of days. Good luck to you. Watch your risk. Take care.